What's going on, you guys? What's going on, YouTube, man? I know it's been a while since I probably posted on here. I'm not your typical YouTuber. I'm not your typical content creator. I've been doing Forex for about 6 years now, a little over 6 years now. And I'm really just personal when it comes to, business and my everyday life. I'm not really a dramatic person. I don't like drama. I don't like everything that's going around on social media. You won't really see me active on social media much. I just stay to myself. I trade and I get off, make my money, lose my money, either which way it goes, and I continue about my life. But I really did want to start getting more into this YouTube space because I see that there's a lot of false information out there, overly complicated information at that too. And I'm really just trying to shed some light on this Forex space. A lot of people are probably going to dislike me for this because a lot of people are making a lot of money off of what I'm about to show you. Honestly, I mean, I'm not gonna lie to you, because Forex is made out to be so complicated, so hard. I will tell you guys one thing that I've struggled with for 6 years plus, okay, and it's psychology, okay. Now, I'm not gonna sit here and feed you some BS story and let you know that, hey, I was down and out in life and blase blase. No, my reason is completely different from your reason, and your reason is going to be completely different from the next person's reason. We all struggle in life, but be honest with you, my psychology came from, um, honestly, a lot of people say they had nothing. Me, I believe that this Forex journey, I've had a lot, and I've been blessed. Thank the Lord every single day that I wake up, every single day that I'm breathing. I thank the Lord, because without Him, none of this would have been possible. My everyday life would not have been possible. So every morning that you wake up, just give your thanks to, who is due, our Almighty Creator. And without further ado, I just wanted to show you guys this quick little back test, for you guys. It was a front test for me because I did it this morning. So boom. All right. So first thing you want to do in the mornings, okay? I just want to get on with this. All right. So I don't know if you guys know what a session-based indicator is. You should. I'm not really gonna go over it. Just know that it marks up your sessions for the day. You got New York, London, Asian session. So it marks it out for you. That's as simple as I can get it for you. Okay. All right. So basically, what I do is I get on the markets anywhere between 8 and 9 o'clock. Anywhere between those windows, I'll just start looking at the markets, analyzing the trend. As you see here this morning, I was on gold. Here lately, I've been trading a lot of futures. I mean, what's new for anybody out there nowadays? They're all trading NAS, the SPX 500, US 30, and gold. It's a lot of people's favorite pairs right now, especially during the summer months when the forex pairs are kind of moving a little wishy-washy in today's markets. But hey, it is what it is. For us, we're gonna keep making money. We're gonna keep losing money at the end of the day. So this is how I analyze it. Okay, it's gonna look stupid. I analyze it based off the 5-minute charts. Okay, you do not need a higher time frame for these pairs. They are very volatile. I trade gold, NAS, US 30, SPX very differently than how I trade. Not very differently, I'm sorry. I don't go too deep into the Forex pairs as I do these pairs because they're very volatile. And at the end of the day, this little move right here made me $5,000 funded on a funded challenge. Okay, so this little move right here made me $5,000, and I'm going to show you exactly what I did, and it's literally going to take me 2-3 minutes of your time, so bear with me. Okay, first things first, you want to draw out a trend line. What did the previous session do in a trend line? So basically, as you can see here, I marked it up. It was about 5 o'clock in the morning, 5:50, whatever. All right, you want to get at least 3 taps. Okay, so right here you have a tap of a lower low. Boom, broke that. Now you're at a higher low, higher low, higher low. Okay, so I got 3 taps right there. Okay, so that's an uptrend for the 5-minute time frame. Okay, I know you can clearly see that it was technically a downtrend on the higher time frames. We are not looking at this higher time frame right now. As you can see, it doesn't look like anything right now because we're on a higher time frame. I don't care. Now, as you can see here, though, I'll get into that here in a second. Actually, here in a second, because on these pairs, I only look at the 5-minute chart. I might glance at the 15-minute to see if there's anything in confluence with it, but for right now, we're going to be on the 5-minute, and there is a confluence on my 15-minute, but I'm going to show you the 5-minute first. Okay. So first things first, I go in here and I draw my trend line. You want to make sure there's 3 taps, okay? It doesn't really matter whichever way you want to go with it. Some people like to draw just that one line. Some people, you can go right here, at the angle breakout. Boom. A lot of people trade that. As you can see here, broke out here. Didn't really tap it, but still tapped that zone, dropped off. I didn't trade it that way. I traded supply and demand, which a lot of people are getting more and more familiar with in today's concepts. So here it is. All right, so I drew my trend line, okay? And what I look for whenever I draw my first trend line in the morning is I'm looking for a break of that trend line, okay? So as you can see here, we continued up, boom. This 5-minute candle right here broke this trend line, okay? All right, cool. So it broke the trend line. Now what I'm looking for, okay? So right here you have this higher low, okay? So right here we have a higher low, some minor higher low, but still a higher low. It's still valid, okay? You see a red candle and you see well, mine's blue. You might have a green candle, black candle, whatever, but mine's blue. You have those two candles, which means that there's some sort of higher low, lower high, lower low being, you know, established. So therefore, that's that. All right. So I had a break at this point, right? Okay. All right. So it broke my trend line. That's one check. That's one confluence. It broke minor structure. That's another confluence. Boom, that's two confluences that I have, okay? And hear me out, okay? So now what I'm doing is right when this starts to happen, I'm creating a supply and or vice versa demand. Okay, so right here, all right, I have my supply zone. It's not really a confluence, but it still is a confluence for what I'm about to do with this trade. So therefore, boom. All right. All I'm waiting for this to be broken. Minor breaker structure. Boom, that's accomplished. Okay, now don't pay attention to my MAs or anything like that because it's gonna confuse you at the end of the day. Just hold on, let me actually. All right, so all I'm waiting for is once it breaks this minor piece of structure. Actually, it broke multiple structures. I sometimes count the wicks. Sometimes I just go by the body of the candles. A lot of people do it differently. You do what works for you at the end of the day. All right, so it broke the structure. Now all I am waiting for is a pullback. I want to see a strong pullback, just like we see here. And once I start seeing that, then I'll start getting out my short position and or buy position. And I'll go to the end of this zone, which is right here. And I'll mark up. Usually, typically, you guys, I try to go for a 1 to 2, 1 to 3 maybe. And right here in this case today, I did exactly at a 1 to 3, which, watch this. This is about to blow your mind. It literally hit my 1 to 3 perfectly. Okay, so what I do is in this situation, all right, I'm waiting for it to come back here and fill in these gaps. Okay, you guys may be asking, what is gap, Travis? Okay, so as you can see here, this candle right here has a wick up top, but it doesn't have a wick on the bottom. All right, this candle has no wick on the bottom, but has a wick up top. All right, so therefore there's a gap between this wick of this candle where it's supposed to be, and there's a gap between this candle and this wick from right here. All right, so as you can see, it kind of looks like an empty space in between the candles. It's got to be 3 candles consecutively in order for there to be a gap, of course. Duh. All right, so all I'm doing is I'm waiting for the market to fill in this gap, and boom, you can see where I entered my trade at. I had a little bit of drawdown. I was actually busy, so I wasn't paying attention. It almost hit my stop loss, but guess what? Whenever you get into that trade, you guys, my number one thing, and I still struggle with it to this day, I'm not going to lie, I'm not going to sugarcoat it, but get off your mind, go to the gym, go do something proactive. Try to get your focus off of these markets and off of the numbers, because honestly, me not too long ago would have been scared about these numbers right here, and I would have got out the trade because I was negative about $1,700, somewhere along those lines, I'm guessing. But as you can see, not even 20 minutes later, my take profit got hit. Boom, got me out of the trade, and luckily it did, because if I would have went for a 1 to 4 or anything like that, boom, I mean, I would have got stopped out of the trade, but then it would have went back into my favor. All right, so more than likely there was another supply up here that it was or a gap to be filled, which is right here. Yep, you can see from right here, from this candle right here to this candle right here, there was a small gap that was never touched. So boom, that's all that this was doing, was filling in that gap. All right, so that's something to take into consideration, but honestly this morning I didn't see it. I was not paying attention to it. I was paying attention to what was in front of me, which is right there. Okay, that's what I was paying attention to. If this would have broke into my stop loss, then I would have been like, okay, so why did I get stopped out? And I would have noticed, okay, oh, there's a small gap right here that needed to be filled. That's all we were doing. I would have possibly re-entered into another trade, which would have been right here. Boom. All right. So I don't know if you guys are familiar with FX Carlos, but Sometimes what I like to do as well, just like him, is I will place my entry point like a centimeter below where the gap needs to be filled at. So like 90% of the way to the gap, I'll put in my entry and I'll let it set me off there. So yes, you take a little bit more loss if you do hit a loss, but at the end of the day, you won't miss a trade. So at the end of the day, if you lose it, you lose it. But if you win it, you win it. So therefore, I mean, what's the difference? There's no difference. You might lose a little bit more money. Boo-hoo. Who cares? I don't. At the end of the day, money is money. But as you can see here, I won this trade this morning, and that's all there is to it, you guys. I mean, literally, draw your trend lines, okay? I'm not going to go into how to draw trend lines. You should know, if you're watching this video, you need 2 to 3 taps. Boom, got my trend line. Boom, mark 1. Wait for a minor break of structure. Minor broke structure right here. Or minor break of structure, I'm sorry. Boom, identify supply or demand push with a gap attached. That gap is very, very important, you guys, and you do not want to miss out with that gap, because you went from a 30% win streak to possibly a 50-60% win streak, and that is where this plays out at, okay? Number one thing that people get screwed up in their heads is the risk to rewards. Honestly, man, you guys, it took me years and years to figure out, like, dang, Travis, you're just risking way too much per trade. If you just risk between 0.5 and 1% of your trade and aimed for 3% of your trade, you'd be much better off. So, therefore, I mean, it is what it is, but that's how I go about my day. I mean, it's literally that simple. Now, something like, let's look up GBP, JPY. Okay, so what we're going to do is we're going to analyze what happened today on GJ. I was not on GJ at all today, but just for, you know, the sake of it, something that I've realized about GJ that you guys, you know, will come to learn is it doesn't really start moving and knowing which way it's going to go until about 8:30, between 8:15 and 8:30. But 8:30, it usually gives you a much bigger spike, especially on like Tuesdays and Thursdays. It gives you like a really big spike for some reason. Don't ask me why, but that's something I've just noticed. Okay, but as you can see here, all right, so we would have had a nice little supply push. Okay, we broke structure. We broke this minor break, or major structure actually was broken right here. If you want to draw it at, you know, the body of the candles, fine. If you want to draw it at the wicks, fine. I do either or, honestly. So it broke this, immediately came back, and look at this, and this is exactly why sometimes I make my entry right before that candle, because as you can see, hold on, let's do something real quick. So broke that, okay, broke that, okay, cool. Okay, so as you can see here, I mean, it barely missed this gap, but it still missed it at the end of the day. So as you can see here, honestly, what I probably would have done is, since that was on the 15-minute, I would have been like, okay, Travis, so that's the 15-minute. You're going to be losing a lot of money with this huge gap right here, and your risk to reward's probably not going to get hit. So I would have came down to the 5-minute chart and said, okay, so this is actually where I need to be at. Boom. That would have been my zone. I would have got stopped out. So good thing I did not trade GJ today, because also that's another thing that you have to play with, is the simple fact that it might try to close the gaps above it. And 9 times out of 10, you're going to get stopped out if there's another gap in front of you. Okay? That's just a probability game. That's what Forex is. It's a probability game. As you can see here, boom, it came up. Didn't try to go for this gap and dropped a little bit. I mean, it happens. You can't predict it. All you can do is use your best judgment. And that's just the cold, hard truth about it. And like I said, I would have lost this trade this morning, because I would have had my stop loss right above this high right here, or lower high. And guess what? It barely stopped me out, but it stopped me out. More than likely, I would have tried to find another re-entry point, but thankfully I didn't have to, because like I said, I traded gold. So without further ado, you guys, I mean, that's all there is to it. If that didn't make any sense to some of you guys, or if you need a better breakdown, just please let me know. You know, like I said, this YouTube thing's a lot newer to me. I don't really try to teach people. None of my friends or family really seem as interested into this side of things that I do. So therefore, I'm just now getting into the hang of things. But it is literally that simple. Like it can't get any more simplicated than what it is right now. Don't let these gurus on YouTube discourage you. Try to tell you, oh, you need Fibonacci, you need all these other indicators. You could trade based off of this naked chart. These MAs and SMAs really do help because they let you know the overall trend, which you can see this trend's kind of weak right now. It's also because it's Monday, which you can see right now. If this MA is below, that means we're in a bullish market. If it's above, we're in a bearish market. So therefore, it does help you kind of see the trend a little bit better, a little bit more clearer. I use them personally. Some people don't like using them. I don't need to use them because I know at the end of the day, this is a higher high. Broke this. Now we're making a lower high, lower high, lower high. I mean, so on and so forth. So I know that we're in a downtrend. So therefore, I don't necessarily need it. Most important thing also, you guys, with these Forex pairs, follow the trend. That's all I could say. Use the same exact technique that I just showed you with gold or GJ. Follow the trend. You're going to lose a trade, but look at this. So let me show you the most important part, risk to reward, okay? So right here, all right, I would have risked 1%. So I would have risked $1,100 for my 1 to 3, which it did end up hitting my 1 to 3, by the way. But I would have risked $1,100 to make $3,000, okay? If I would have lost this, guess what? At the end of the day, I would have went over here to gold and made $5,000, as you can see. 517 pips. I don't think I quite made 517, but I made $5,000 at the end of the day, minus commission from, you know, the prop firm that I'm using. So therefore, I would have made a $4,000 profit today. So don't really look at what you're losing every day, because I can literally lose all week long, and then here comes next Monday, I win one trade and I'm back at break even. So just know, you guys, the most important part of having a Forex strategy is having your risk management in place. If you want to risk more, cool, but just know that you're at risk of blowing all your money. I mean, simple as that. If you're in prop firms, you're at risk of, you know, breaching one of their guidelines, their rules, blase, blase. But if you guys need any help, just please feel free to let me know. I don't mind helping. I'll hop on a Zoom call. We'll hop on something together, and we'll go over, you know, how I see it on a day-to-day basis. Like I said, I just wanted to show you what you could back test, but I forward tested today. So, all right, you guys. Peace.